You can ignore reality, but you cannot ignore the consequences of ignoring reality. Ayn Rand. The financial market signals are very clear. A market crash is coming. You may not agree with what I just have said and think I'm wrong, but in the end, that doesn't matter. What matters is, in case you're wrong, what will happen to you and your money if markets collapse in 2023? Will you be able to ignore the reality? So, if you want to understand why US stocks could collapse another 35% after already having fallen around 25%, stay until the end of this video and you won't regret it. But before we start, make sure to subscribe to this new channel to see more videos about economy and interesting economic facts from around the world. Also, if you're interested in learning how to make more money, check out the link below. 2022 has been one of the worst years for those who invest in the stock market. To visualize, all the major stock market indexes in the US, which is the largest financial market in the world, have lost around 25% of market valuation. The Dow Jones has declined 22% from the peak. The SP 500 has declined 27% from the peak. And the Nasdaq has declined 37% from the peak. This is what investors call a bear market. Bear markets occur when prices in a market decline by 20% or more and are often accompanied by negative sentiment and declining economic prospects. And that is the exact situation of the United States economy, which will soon affect the entire world. Unfortunately, shortly after recovering from the 2020 collapse, the world and the United States are about to suffer another economic shock, and now the consequences to the financial market will be much worse. The reason for that is because the 2020 crisis was an outlier event. What happened in 2020 was a nature event, and as a consequence, governments and countries did everything they could to prevent larger damages to the economies. That's why we saw an unprecedented amount of money being injected into the economies and unprecedented debt issuance. But now the consequences of those actions appeared. Now, governments are facing an ancient enemy which wasn't present in the 2020 collapse. And that enemy is inflation. Because of the unprecedented money printing and the supply shocks of 2020 and 2021, the world is now suffering with high inflation. For those who don't understand, the inflation is a problem caused by the mismatch of demand and supply. In other words, the demand is higher than the supply, which causes prices to go up. This mismatch can be caused by an excessive demand over supply or a small supply over demand. In both situations, the result is the same: prices going up. Today, the world is suffering from both causes: a higher demand due to the money injection and a smaller supply due to the economic shocks all over the world, such as the energy shock. All these disbalances have direct negative impacts on the financial market, and now dark clouds are hovering over the stock markets. That's why a stock market collapse in 2023 is something very likely to happen. And what is worse, as history teaches us, a minus 35% decline is something we cannot ignore. Let's see now why this is possible. Inflation and the FED. As you have seen, inflation is the main cause that is spreading fear across the world. And that's because inflation is one of the worst economic enemies that exists. It can destroy countries and empires. Since ancient Greece, several countries lost their power and hegemony due to inflation. This is exactly why the Federal Reserve is worried and doing everything within its reach to eliminate inflation. After the official inflation achieved its highest level since 1981, the FED started to raise the FED fund, the main interest rate in the United States. However, this economic policy has negative impacts on the financial market. It is not by coincidence that together with the raising interest rate, the stock market started to fall. To visualize this, we can see that since the beginning of the year, the markets fell together with the rising FED fund rates. This happened because when the FED raises the interest rate, all economic activity and the financial market are affected. Basically, the cost of capital becomes more expensive. Companies start to spend more interest on their debts, and new debts become even more expensive. With that, companies' earnings are affected in a negative way and profit starts to fall. As the stock market reflects companies' earnings, whenever the company's profit shrinks, its stock price declines. This is why the stock market usually makes opposite movements to the interest rate. Now let's see why stocks could collapse another minus 35%. Minus 35% decline ahead. It may seem crazy to say that the US stock market could lose another 35% in value after losing 25% in 2022. But the truth is, if the market collapsed another 35%, it would simply repeat bear market's pattern. To prove that, let's see how the stock market behaved in other bear markets moments. 2001. In 2001, the world experienced the internet bubble. Stock markets around the world suffered huge crashes. The S&P 500, the most representative stock market index in the US, suffered a minus 48% decline from its peak. But that wasn't anything comparable with what happened to the Nasdaq index. The technologic index suffered an incredible minus 82% decline from its peak. This was one of the most destroying bear markets the US has ever seen. These two examples show that a 50% decline is something very possible to happen when a truly bear market happens. 2008. In 2008, another recent bear market, the US stock market suffered huge collapses. In that bear market, the S&P 500 declined approximately minus 56% from its peak, and the Nasdaq suffered a minus 52% decline. Both indexes lost more than 50% of their values in approximately 2 years of horrifying declines. 2023. And before we explain what can happen in the stock market in 2023, don't forget to like the video so we can bring you more relevant content. And if you're interested, check out the link below to see how to start your online business just as I did. 2023 might be the year that will shock the world. If investors became speechless by the cumulative 35% decline in the S&P 500 in 2020, they'll be horrified when they see the cumulative decline of 50%. And today's numbers for the S&P 500 accumulate a 50% decline from its peak. It needs to decline another 35%. This means losing more than 1/3 of its current value. The consequences of this crash will be huge. Several citizens will lose their jobs and the unemployment rate will skyrocket. That's why you need to listen to my advice. Start today, another income stream, and prepare yourself for what's coming. You'll thank me later. Well, now that you know more about the upcoming 2023 US financial market crash, please help this channel by telling us what other country or economic issue you'd like us to analyze. Let us know in the comments below, and don't forget to like and subscribe to our channel to see new videos about economy and interesting economic facts from around the world. And don't forget to turn on that notification bell, and we'll see you in the next one. Until next time, goodbye.